Good morning and welcome back to Almus Market Mornings. Investors are awaiting two central bank rate decisions, Bank of Japan and the Fed. For both the central banks, rates are expected to remain unchanged, but investors would be keenly looking at the forward guidance. The Trump-Putin conversation on ceasefire was also uneventful. While President Putin rejected a complete ceasefire, some agreement was reached on not hitting the energy infrastructure. Good morning, JK. Ahead of the two central bank meetings, how are investors positioned?
Yeah, good morning, Swaraj. I think market is not really, uh, you know, preempting any sort of a move from either the Fed or the BOJ, because this meeting is not going to result in any change in the monetary policy. As far as FOMC is concerned, while holding the rates, I think they will be conscious of uncertainty over the government's policy, and the committee will stay in a safe place, saying economy is giving them time to be patient, and they will remain dependent on data. And no doubt, Powell will field some questions about some measures showing soaring inflation expectations. However, he will no doubt downplay it because he has no other choice, because the, there is no clarity at all on these things. And of course, Bank of Japan, no immediate hike, or rather, no hike is expected tomorrow. While the wage rises in Japan have been at a record highs, so next meeting is most likely when they will uh, change the rate to the higher side. And in the UK, of course, tomorrow is the meeting, and again the rates are expected to stay at 4.5%. More once again, expectation of influence from the US policies on inflation, and also the growth picture in the UK. All these things will keep them on the somewhat on hold as far as tomorrow's meeting is concerned. But overnight, quite a few developments which, in fact, have should be helping the investor sentiment, positively. While there was no full-scale agreement on the 30-day ceasefire, also it was a partial ceasefire that the Russian side has agreed to. It's more of stopping attacks on Ukraine's energy infrastructure, and I think the talks will be ongoing. That is what the indications are. Uh, Kremlin has some demands which it could immediately met. So, but hopefully, this will be continuing. On the German side, there has been a historical event of debt brake being approved by the lower house of the German parliament, and it was by an overwhelming majority of 513 to 207. The decision obviously helps pave the way for higher spending by the government on not only defense but also on infrastructure. More than the fiscal implication, the fact that various parties in the country came together to pass the legislation shows a better unified approach in a crisis-like situation, and that should be actually improving the global investor confidence about investment in Germany in particular, and also in Europe in general. So that support the euro assets and also the euro dollar currency as well. On the on the tariff side also, there has been some indications that the government would be indicating to various countries the tariff that they will be imposed from April 2nd, that will be given as an advance intimation. And the Treasury Secretary has said that each country will receive a number that we believe will represent their tariffs. For some countries, it could be low, for some, it could be high. And it's an indication that there may be a period of negotiation before collection of new import duties start. And we are going to go to them and say, look here is what we think the tariff levels are, and we will not put up the tariff wall. And if you want, if you will stop this, we will not stop it. But of course, it is open to negotiation. That is what they are saying. So there's some sort of a leeway that being provided as far as the tariffs are concerned. So broadly, investor sentiment should be improving with these developments. Although yesterday in US, the stock markets did take another small hit relatively. It's an ongoing correction in the US market. Therefore, you see that any recoveries are not sustaining, and therefore we are seeing often the sell-off resuming, particularly in the overvalued stocks. But that doesn't seem to be affecting the other markets. They are, including the Indian market, which had an impressive rally yesterday of over 1%. Even the Chinese and some of the other Asian markets are showing resilience as far as the stock market is concerned. But it is a very mixed picture, because I think now markets, or rather investors, are differentiating between different regions based on their economic situation. Europe is doing well. Yesterday, on the contrary, in Indonesia, the stock market fell by as much as 7% intraday, and when there was a negative growth picture that was being painted. I think it is a situation where investors are picking and choosing the markets to invest, and perhaps India market, having got sold off quite a bit in the recent months, is turning out to be somewhat attractive for the investors. From the currency point of view, we are seeing a lot of range trading. It's not that FOMC is stopping the market from moving ahead. I think market is looking forward to some sort of solid positive news from other economies, because the economic news from US has not been very encouraging so far. They have been mixed. Industrial production data yesterday was better, but it follows a very steep fall in the Empire State Manufacturing Index. So, as far as US is concerned, I think market is expecting future data to get influenced lower by various policies that the government is following. So markets are on kind of a holding pattern, because the dollar index is also at a very key level of 103.30 support. I think it will take some big trigger for the market to move. So this state of rangy movement could continue. However, the euro break of 1.10 will probably trigger more move on the upside, and can carry the other currencies also higher along with it. As far as the rupee is concerned, once again, a surprise continuation of the strength yesterday towards 86.60, or slightly lower than that. It is the play out of some flows, as well as some exporter selling. Financial year related selling also was seen. However, I think these are levels where one would expect some support to emerge for the USD INR, at least at 86.50, because of possible RBI stepping in to replenish their reserves. They may also buy dollars to infuse more liquidity into the system, as we are approaching tightness in the local liquidity. There is the uncertainty about tariffs and other government US policies have not gone away. So investors will not be too complacent on the exchange rate remaining too strong. Finally, these are levels where importers will have lined up their action to cover near-term payables, because it is generally believed that the rupee will stay in a range for some more time, until we see broader improvement in the overall global situation, as well as FII flows turning decisively positive. Until then, I think 86.50 or slightly below that should offer very good support to the USD INR. Even if there are large flows, that should get absorbed. A gradual move towards 87, but not much beyond can be seen in the coming days as well. Thank you.
Thank you, JK. And from the two central bank meetings which are upcoming, Fed is expected to hold rates, but it seems that in their statement they will be cautious over the government policies which are ongoing. Where when it comes to BOJ, no hike is expected. But despite the record high wage hikes, so the May meeting, which is the meeting after this, would most likely get a rate hike, and it is expected that the governor would indicate something for the May meeting. When it comes to overnight developments, as JK mentioned, no full-scale agreement on ceasefire was reached, but a pause on the energy infrastructure attacks was agreed upon. And there was a historic event because the German parliament voted for the debt legislation. It was passed by a solid majority. This supported the euro assets. Yeah, in the domestic markets, the Indian equity markets had a good rally of over 1%. Rupee saw a good amount of appreciation, breaking the 8660 mark, trading below 8660 financial year end, along with some flows led to this appreciation. But as JK mentioned, 8650 can see some dollar buying by the central bank and importers who may cover some of their liabilities. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.